Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, May 31st, 2016. I hope everybody here in the States had a great Memorial Day weekend, nice long 3-day weekend, and for those of you outside the States, I hope you enjoyed your weekend as well. Let's dive into the charts here. I wanted to do an overview of the trade ideas, starting with the short trade ideas I'll do in this video. There were a couple which stopped out on Wednesday, the XLE trade, XLE/ERX, depending if you like to short the leveraged ETFs. That one I'm on watch to add that back as a possible another short official short trade entry, but it did exceed the suggested stop by just a hair. We're talking a few pennies, but a stop is a stop, so we stick with that unless stated otherwise. The other trade was a AVGO trade. That one also just barely took out the suggested stop for a relatively small loss, also on Wednesday. So those have been updated on the front page, and I'll go through the remaining active short trades right now. Starting with ADP. ADP has this nice triple top pattern that was highlighted in the original post. 1, 2, 3 failures here at this 90-50-ish level. And for those of you not familiar with the triple top pattern, if you take a look at the this consolidation here, and we put this up, this is our really the scope of the pattern, this consolidation. So you have the base of the triple top pattern right here. You might want to use that level as well. But for the sake of being conservative, if I have two levels, let's say I can make a case that this is the bottom of the pattern or this is. The way a triple top pattern works is you take the measurement of the pattern, which I've done here, add it to the bottom of the pattern, the base of the pattern. If it breaks down, that gives you your measurement. Now, had I used this lower line, we'd have a little bit a measure target that goes down a little bit lower. But in trading, if I could make an equal case for two targets, I would prefer to cover at the first target, and reason being if more eyes are watching that, let's say the majority of traders are watching this level, the stock is going to reverse when it gets there. Add to that the fact we had nice horizontal support here. We have this reaction low. We have several other reactions around this level here. So that would be if I decide to extend the targets, if the market really shows me some signs that it's rolled over and we're on the next big leg down, then this trade will probably be extended to just above that level, that 64, 65-ish level. So there's your triple top pattern. We had the nice uptrend line, breakdown, back test. I mean, this is just a very nice looking chart as far as, you know, this stock behaving, if you will, off the technicals, you know, with the breakdown, perfect back test, the triple top so far, and getting back to the daily time frame. We were just on a 2-day period chart. You can see what's happened since posting this entry. We hit that support level there. There's a support level about 84, 81. Had a reaction. We came back up to this $88 level. I believe I had this support resistance line at 88 on the original chart, and so far today a nice failure at that level, especially the fact we punched up through it. That's even better in my book. I love these little fake outs. So, you know, when a lot of eyes are watching that level, okay, we took out, see the 3 previous candlesticks, how they really failed at that level. We punched through it today, just like the broad markets tried to do. And as my expectation was there, if they took out those downtrend lines I posted last night, which they did, that would probably fail, and so far we have failed. So in other words, all other things being equal, most of you guys know my near-term outlook is still bearish on the markets. I would rather see a false breakout, in other words, a breakout above resistance, which fails, than a reversal at the actual resistance level. The reason being is it's more bearish when you have those bull traps. In other words, a false breakout of a resistance level, you have more longs pile in, you have more shorts, the weak-handed shorts cover, and it just changes the underlying supply dynamics in the market. So that's what we've seen in the broad markets today so far. We saw that with ADP and the breakout of this level and a nice bearish engulfing candlestick, that meaning this candlestick, today's big red candlestick, engulfs yesterday's candlestick, and if ADP heads much lower, you will have engulfed the previous 3 trading sessions, all 3 of these candlesticks. So so far so good. Still some work to be done. There's the divergent high. When we had that triple top, there was a slight an attempt to break out there, a few punches just above the previous reaction highs, but not by much. but that did give us negative divergence on the daily time frame. And we go look at the weekly chart, and to me, just a beautiful chart. Here's the uptrend line off the bear market lows back in '08. So this is your primary bull market uptrend line in ADP, and that would be also a longer term target. We're well above that now. And then I have this minor uptrend line, which still goes all the way back. This one goes back to early 2013, and that would also be a support level, but my expectation would be we break down. And that is in itself, this line and this line together form a bearish rising wedge pattern. That is confirmed with strong divergences, negative divergences on the weekly chart here on both the PPO and the RSI. And that's what tells me that ultimately this pattern is more likely to break down to the downside than to be busted up to the upside. In other words, price is moving higher, taking out this trend line. Now you can play around with it. If we happen to make a new high, you know, we might do something like this, but I don't see that right now. And if we do, we'll be stopped out because I think the stop should be set right above the triple top on that one. So there's ADP. Looks good if you're, you know, patient and willing to hold and ride out the ups and downs. I think that one looks promising. Okay, next one, and I'm going in order here, alphabetical order on the active short trades, is AG. This one still looks to me to have a lot of meat on the bone. Yes, it's up today. Why is it up? Well, I mentioned this in the trading room, more than likely because GDX is up. GDX is up 2.33%. Well, you might say, well, AG is a silver mining stock. As I mentioned, GDX has a lot of silver miners in there. Many of the mining companies pull both gold and silver out of the ground. AG is a component of GDX. GDX is a case of the tail wagging the dog. In other words, you have more money flows coming into GDX, I believe, by far than, you know, or I believe day to day than the individual names. So when you have money coming in, they have to position. The ETF has to buy the stocks, essentially, or derivatives on those stocks. So basically, GDX up makes the components go up. GDX down makes the components go down. That's it. That's it in a nutshell. Why did I mention that? Well, there it is, 2.33 gain in GDX, 1.93% gain in AG. I mentioned that gold is bouncing off. There's my target on 115.70 on gold. Perfect. You know, gold's finding support. A pretty weak reaction, too, to be honest with you. That's such an impulsive move down. The fact that gold can't mount a more explosive rally off the initial tag of that support level, we hit it on Friday, says a lot to me. Look at the MACD is pointing down. The RSI is getting close to oversold, but still has some room to go. And, you know, I would still, if gold wants to bounce in the next couple of days, that's fine. So what I'm trying to get at here is GDX is bouncing in sympathy with the with gold, with the metal. But remember, AG is primarily a silver miner. I believe I don't study the fundamentals on each and every one of these companies, but it is listed as a silver mining stock. And here's silver, the ETF, down 0.84%. It was down a little more earlier. So AG is shrugging that off, and again, probably most likely being driven by the strength in GDX today. However, silver is just getting, you know, hammered recently, and it took out that I mentioned already. I won't go off on a tangent here too much, but my expectation at this point, since we took out that support level there at around 1560, is for a continued move down and most likely a back test of this downtrend line, which gives us another roughly, if it comes in around there at that point, there's another 2.5% downside in silver, and that'll eventually take its toll on a lot of the silver miners like AG. So AG, again, has plenty of meat on the bone in my opinion. Target is 867. We're profitable on that one. And we'll just have to watch if the gold rally gets a little more traction, silver starts to reverse. Again, if you trade the miners, you just have to, if you're swing trading, you have to allot or allow for these, you know, above average counter trend rallies and day-to-day swings. You know, if you're not comfortable with a, you know, 4, 5, 6% move against your position, then you're trading the wrong instrument, because that's just run of the mill with these mining stocks. Even GDX, the ETF, which is diversified, it is far from unusual to see a, you know, a 5% up or down day, if not more. So that being said, you have to just, bite the bullet and position size accordingly, so you're not freaked out when your position is going against you on 1 or 2 days or 3 days, and look at the longer term picture, which I see a very steep rising wedge, which has only recently broken down. Divergence is confirming. So as long as that one doesn't hit the stop, and if it does, it hits the stop, and we can always get back in if the miners roll over and we just have our stop clipped. That's one thing about trading, but as of now, it looks good, and like I said, for a move down to at least that 876 level. All right, let's move on. Okay, I'll have to move through these a little bit faster. Wanted to have this a short video, keep this video relatively short, and there's quite a few more to cover. This is Amazon. Quick look at the daily chart. We're still within this ascending price channel. See this uptrend line here and this uptrend line there. There's an ascending or rising price channel. We had that one little false breakdown below. I forget, I was probably highlighting something before with that circle. You can see the strong negative divergence continues to build. And on Amazon, let's take a look. I believe on the short entry, I posted this. We're on a 30-minute chart now. We had a breakdown of this bearish rising wedge pattern. First target was 687.10. Did we hit that? We may have hit that. I don't think so. Low 688.76. No, so we came just shy so far of the first target. Now on that, just keep in mind, I mentioned on the setup in the entry for this one, suggested stop above 723, and I'm reading this verbatim. Although those targeting T3 or even a possible longer-term swing trade, which personally I am, could use wider stops, allowing for a back test of the wedge. Well, we didn't get a back test, but we still, if you use a wider stop, we're just flirting with that 723 area. I mean, we slightly punched above it, you can see there. By, on $723 stock, we're talking basis points. A basis point is 1/100%. So I'm not going to stop this one out yet because I'm allowing for the wider stops. I think this one has a lot of potential to the downside. Usually I try to keep pretty consistent with these stops, but I did mention on there the possibility of giving a little room to that one. So let's just say if that one closes much above 723, I'll remove it, and I'll make an update on static posts and give you a hard stop if you guys want that. But I'm just giving this a little room right now. The market's been trading real quirky lately, and I'm doing my best to stay disciplined on certain trades, but ones like Amazon, that's one I went in with a more flexible trading plan to begin with, and that's what was stated on the original post. So Amazon looks okay for now, and until we take out this downtrend line, it's that one could work its way up a little higher, but this would be your next sell signal and a break of that downtrend line. And again, a lot of meat left on the bone if this one does roll over along with the broad market. Berkshire, BRKB. This is what I would consider one of the, it's a low beta, low risk, a long-term, almost an investment in reverse, long-term short trade. This one was entered all the way back. The setup was posted back on, let me look at the other monitor here, May of last year. So this one's been on for over a year now. And we hit it near the highs. We shorted it up here, so we're still profitable on this trade. It went on to hit the first target, 129. I know it's hard to make out there, 129. Came close to the second target. There was bullish divergence, and it bounced. It broke above this wedge. But if you look at the indicators down below, the PPO looks to be rolling over now. It's poised to make a bearish crossover. I think what I'm getting at, I think the bulk of the run in Berkshire is the counter trend bounce is over. This looks like the broad markets. It looks to me like a stock that is topped. In other words, this was the end of the bull market in Berkshire. There's the 2009 lows. And just like the broad market, we've had the first wave down, a counter trend rally, and I think Berkshire is ready to take the next plunge down, which would take out these lows and take us down there. So not my favorite, not one of my typical explosive trades where you're looking at 20-30% or more in a few weeks. This isn't a get-rich-quick stock, but I left it on because it hasn't stopped out, and it still looks to be promising. Here's a daily time frame. Just look at here. This is what's keeping me in it, thinking it's going to roll over. Nice divergent high. You can see here I'm drawing negative divergence. Price is making a higher high against both the MACD and the RSI making lower highs. So pretty clear negative divergence there. We had the first wave down following that divergent high. Came up to hit this resistance line here, defined by support back here, resistance here. and we're rolling over now. You can also almost draw, you could draw a head and shoulders pattern as I'm looking at it here with the left shoulder right here. See this left shoulder, pull back, there's a head, maybe a right shoulder. I haven't confirmed that with volume patterns, just something else. But like I said, the divergence and all that keeps me in that one. And that's one I own. I've tucked that one away. I've had that one for about a year now. Again, not a big winner, but I think it has potential in the long run. Next one up is Foot Locker FL. This one we shorted all the way back here on the back test of this uptrend line. This uptrend line goes back a little further. I'll show you that in just a second. So we had a very timely entry. We went down. We hit our first target really quick, bounced up, came back to back test right about our entry level. We tried to pop above that resistance line, failed. It had this trading range here. If I box that in right here between the red line and orange line, you can see that trading range broke down, tested it from below. So the technicals are working well, the trade's playing out well. Finally, after we failed to regain that level, whoosh, a little plunge down. Looks like a little bear flagging action here if you see the prices moving up. So that would be your bear flag, flagpole. And if we do get a breakdown from that flag, we'll come down probably relatively quickly, meaning within just a few days, and hit this T2 5160 level, which I'll probably keep. That is the final target. I'll probably just keep it as such. Plenty of meat left on the bone, in the longer run. If the broad markets roll over, it's not all drawn out here, but there's divergence on the PPO. If I drew against prices making a higher high here, and this is an uptrend line. Same one I believe we were just looking at in the daily chart. This is a 10-year weekly chart now that I'm looking at. So you can see the breakdown, back test, prices rolling over, and I would put very good odds that in the coming months, that may take till year's end or who knows when. The stock's at 55, 52 now, and this would be my final target if I decided to tuck that one away, which again I may not, but that's another 30% move down, all the way down here to that 37, we'll call it the $38 area. But again, as for now, that's my target, and we'll just have to assess it as it comes as far as adding any other targets. But for now, I'll leave that one on as the final target. GDX, not much to say that I haven't already. I cover this one quite a bit in static posts, and I talk about it a lot in the trading room. There's your steep rising wedge pattern, these two lines, breakdown, back test, prices moving lower. There's, an ultimate target. I have some official targets here on the, where one of these boards here. My apologies for not having it up. Somewhere on one of these boards, I had a series of price targets. There it is. So right now I still have that final target at 2152. I might raise that just a hair. The actual support I have here on the 60-minute chart at 2140, and down here on the daily chart I have a line at 2119. So either way, we'll leave the official target right now for 2152. GDX just bouncing in sympathy with the gold, but as I pointed out last night, the gold has actually come in, really topped and done nothing for a while, moved down lower, where the miners kept running after gold topped and I think got ahead of themselves. So even if gold, let's just say, holds up here around that support level we're at now, it wouldn't surprise me to see a little more air come out of the miners. So personally, I've continued to hold. I took some profits on my nugget short last week, but I'm still riding the rest for now and sitting tight. Here's Priceline, active short. This one we shorted somewhere. I've modified this trend line ever so slightly since the original post. You'll notice it came in right here. This is where we shorted, and it was back testing at the time. I've moved that trend line up just a hair to account for the previous price action, or the subsequent price action, I should say. And so that one has a modest gain. We're up about a little under about 4% gain right now. Nothing big. Waiting really to see this level go. If you look, I put a horizontal line here. You can put one at the very bottom where those candlestick wicks have just, or tails, shadows have just touched. That would be the top of that support zone. So here's a support zone that needs to go. And when that goes, very thin. You look at the big gap right here. That gap is likely to be backfilled. And so I would expect a pretty swift move down if and when Priceline rolls over, which I do think will happen. We can see most recently I'm more on a daily time frame. So what I'll show you here is the divergence in place. And there's this, among a lot other things, is why I'm not chasing the recent rally and not buying into the recent rally in stocks. The low volume, some other things tell me that it's probably not going to stick. And there's your divergent high. In other words, prices moved higher here against the MACD and the RSI dropping. Weekly chart, like most everything else, that helps formulate my my near-term bias right now. And here's price line on a weekly chart, breakdown, back test, rolling over. This is a pretty well-defined trend line, goes all the way back to 2010. There's your divergent high, negative divergences. There's some targets that I've listed and suggested stops. You can reference the notes on that trade by checking the website. Next one up is the XOP Gush trade. XOP is a one-time ETF, and as most of you know, when trading, I'll often short the leveraged three-time ETFs to take advantage of the decay. I prefer to short those and go long when I'm doing a swing trade, anything but a day trade, or a 1 or 2 quick, 1 or 2 3-day trade. XOP. We shorted that one. The entry was all the way back here at 36.23 on, I'm looking at another monitor here, April 29th, and we were up here. Actually, it was this rising wedge pattern, I believe. So yeah, we shorted inside the wedge, and we're still profitable. That one even it hit our first target, and remember, even if you're trading Gush, I like to use the one time for the chart for charting purposes, because you don't have the distortions that you get from the leverage over time. So this has played out well for a Gush short, because we've pretty much gone sideways. We're almost back to where we started, and in fact at one point we may have just hit break even there. I said that 36.23 was the original entry, so yeah, you can see to the left that's about where we got back to break even. However, this decay works in the advantage of being short the three-time leveraged Gush. And I still think there's more downside. I'll get to oil here in a second, but what crude oil does, XOP will follow. And in fact, crude oil has held up, and XOP has sort of lagged lately. So you can see we peaked, and XOP is still well below the peak back in the end of April. And we have these minor downtrend lines here. Broke down, went up another one, and I think once we break below this one, that will likely trigger the next sell signal. So there's a downtrend line to watch, or an uptrend line, I should say. This support level's been sliced through a few times. I wouldn't give it too much significance. It was a level I was watching, but my next and final downside target at this time is still 31.77 on XOP, meaning if and when XOP gets there, I'll be covering my Gush short trade and also taking the official trade off the site unless I decide to extend it. I had a max target down here of 28.60, and so that's XOP. Let's take a look at oil real quick. Here's USO, which is also a short trade on the idea. The USO or WTIC, my preferred shorting proxy. That's the three-time leveraged crude ETF. And USO, oil just works its way up. Here's a nice bearish rising wedge, double negative divergences, meaning we had a divergent high right here with these lines, and then an even steeper second divergent high as we pushed up and made this more recent high from this point to this point. And we're really getting pinched, in that wedge. It's still at the sweet spot for breaking down. I'd like to see it break down soon, obviously not just because I have the position in a short position, but just where it needs to break down. Once prices get too close to the apex, I've seen plenty of breakdowns occur there, but this would be the sweet spot. We need to see it break down soon to really keep this pattern healthy and intact. And there's our targets. Preferred targets still 1077 on USO. So if and when USO gets there, that's where I'll be covering the UWTI trade. Okay, I think that's it. I believe I've covered all the active short trades on the site right now, and I'll do the same with the long trade ideas soon. I don't have as many longs on the site right now because of really what I'm seeing. I try not to let my bias influence the trade ideas. I know some of you out there only trade long ideas. And also at times my market analysis will be wrong. So even personally, I like to trade a mix of long and short trade ideas, and I'll work. I just haven't seen many standout opportunities. You know, I did mention in the trading room today, somebody brought up MU. That was one that broke out of a range. It's up a little. It's up today. So I'll keep the unofficial trade ideas going. I didn't post MU as an official trade idea because I saw these semis at resistance, and I have my concerns there. But again, I'll talk on the long trade ideas in a separate video. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.